Americans can have confidence that the banking system is safe.
Silvergate shutting down.
The collapse of Silicon Valley Bank is causing shockwaves.
Regulators today abruptly closed Signature Bank.
Just take a look at the shares of First Republic, down 65% here at the opening bell.
This is the biggest failure since 2008.
Another one bites the dust. Another one bites the dust. Ow! Another one bites the dust. Hey, hey! Another one bites the dust. Hey!
In breaking news, the US Federal Reserve has bailed out the Silicon Valley Bank.
This is going to zero too. Euros are going to zero. The yen's going to zero. The Chinese currency is going to zero. It's all going to zero against Bitcoin.
I'm jacked. I'm jacked to the tits!
Look at what's happened. This is dramatic. 48% probability right now that the Fed does nothing. Sorry, is that one right?
President, what do you know right now about why this happened? And can you assure Americans that there won't be a ripple effect?
Do you expect other banks to fail, Mr. President?
Should all depositors be protected at all banks?
If only there was a decentralized bank that didn't require a bailout. What could that be? So in this video, we're taking a look at Bitcoin. It's doing exactly what it needs to do right now. This is why it was created. The banks are failing. Bailouts are required. The debasement of money is going to occur. And this is why you need hard sound money, BTC. So let's take a look at what's been happening over the last couple of days here with the craziness in these markets. If you're new here, please do subscribe to the channel. Starting here with BTC, as you can see from the chart on screen there, we've got two levels mapped out here on the short-term time horizon. I'm expecting there to be quite a lot of volatility, but I do expect a resolution to the upside coming out of the whole saga that is unfolding right here. 23.7k to the downside is a momentum pivot. Lose that kind of line, we're dropping another $1,000 potentially. But to the flip side, we have a bit of resistance here at around 25.2, the previous range high. If we can break that, we will move towards the new range high at around $26,000. So those are the kind of momentum pivots I'm looking at in the market right now. But let's jump into the meat of the video. So we can see here from the Genesis Bitcoin block, the message inscribed by Satoshi himself. The Times, 3rd of January 2009, Chancellor on the brink of a second bailout for the banks. So banking bailouts was the reason why Bitcoin was created. And this week we've seen two more over in the US and now with Credit Suisse in Switzerland. So what the heck has been going on here? Well, first and foremost, we learned late last week that SVB, Silicon Valley Bank, was in dire straits. We saw scenes of individuals queuing outside this bank, looking to take out their money and run for the hills, or one of the more established banks in the US. So the Federal Reserve had to come out and say this, that essentially they're bringing out this new term, BTFP, very similar to BTFD, buy the fucking dip, but instead of buying the dip, it's essentially bailing out the struggling banks. So with this, there was a large potentiality for other regional banks to have a run on them. And so the Fed's hand was forced. They had to reinstill confidence in the banking sector and say, look, we're going to cover all deposits. You will be made whole. This essentially is backstopping the banks, bailing them out, whatever term you want to use. They're not using the term bailout themselves. They definitely have the mindset of, if we don't call it a bailout, then it's not one. Let's label it different. The plebs won't know. But we do know this means the money printer go burr. And as the statement in the green says there, they announced they will make available additional funding to eligible depository institutions to help assure banks have the ability to meet the needs of all their depositors. And the brand new term, Bank Term Funding Program, BTFP, was born from this. Monetary policy being rewritten as we watch live. Then yesterday we have Credit Suisse. Their share price absolutely cratering, looking like a badly affected altcoin in a bear market. And there were statements coming from Credit Suisse, quotes along the lines of, there was material weaknesses in their financials. Sounds a bit odd. So the term, if the US gets a cold, Europe gets the flu, is quite apt here. And you can see the kind of contagion of a loss of confidence in American banks also happened for struggling banks in the EU. This being, of course, Credit Suisse, the first crack in Europe. So a bailout in the US, now a bailout here in the Eurozone. And this was a clip of the chairman from the Saudi National Bank. These guys own the largest stake in Credit Suisse. And essentially what they come out and said here was, we're not going to be throwing good money after bad. We're going to step aside here. We've just seen what happened over in the US. Why would we put money in when obviously the central bank is the one that's going to have to backstop this? So let's listen to this clip as he is asked, will they help financially support Credit Suisse here?
The answer is absolutely not, for many reasons, outside the simplest reason, which is regulatory and statutory. We now own 9.8% of the bank. If we go above 10%, all kinds of new rules kick in.
So he quotes regulatory issues as to the reason why they wouldn't want to own more of this bank. But we all know the reason here. He's got a good poker face. He understands game theory. Why not step aside and allow the Swiss National Bank to actually plug that gap? And that's exactly what's happened here. So late last night, we had a press release from the Swiss National Bank. Essentially, this is like the Fed, but of Switzerland. And they came out with this statement. We'll just highlight the top piece here. The Swiss National Bank, SNB, and FINMA, which is the Swiss Financial Market Supervisory Authority, assert that the problems of certain banks in the USA do not pose a direct risk of contagion for the Swiss financial markets. The strict capital and liquidity requirements applicable to Swiss financial institutions ensure their stability. So they're saying, look, put the stamp on this. Swiss banks are good banks and they're known for their banking infrastructure. This is a place where a lot of rich people bank their money as it has such a good reputation. So they need to uphold that reputation here. Credit Suisse meets the capital and liquidity requirements imposed on systemically important banks. If necessary, the SNB will provide CS, Credit Suisse, with liquidity, aka we have a backstop, we will bail them out, we have the deep pockets to do so, we will plug the gap with money. So the band-aid is firmly here for Credit Suisse, supplied by yours truly, the Swiss National Bank. Fast forward to this morning, Credit Suisse shares saw 30% on the Swiss National Bank loan announcement. Shock, horror. Shares are now up around 30% this morning. They've received 50 billion Swiss francs, around $54 billion from the Swiss National Bank. It says the embattled Swiss lender announced late on Wednesday that it would exercise its option to borrow from the central bank under a covered loan facility and a short-term liquidity facility. So Bloomberg posted the chart of Credit Suisse's stock early this morning. It looks like an altcoin chart, not going to lie. But of course, this is not an altcoin. This is a major European bank trading like a shitcoin you might find on Binance. Link down below. So now today, there's actually a very important meeting. The ECB, that is the European Central Bank, meet today, the 16th of March. They're going to be discussing monetary policy and coming out with their funds rate, i.e. the interest rate for the European Union. This was expected to be 50 basis points before this week's shenanigans. However, that is likely to change, and there is a very, very big speech coming from Christine Lagarde later today, 1:45 p.m. UK time. So the European Central Bank gets to act a week before the FOMC, but this, I believe, could set up the pivot or U-turn in monetary policy for the West here. Europe are the first one to act, and so there will be a lot of eyeballs on Christine Lagarde today. Can you imagine the nervousness she must be feeling right now as she is about to deliver that speech? So all eyes on Western policymakers here. A very, very big day. Now, formerly a member of the ECB executive board here, Lorenzo Bini has actually said this: the ECB should either delay or pare back this week's planned interest rate increase to avoid a policy error reminiscent of 2011. We've also got BlackRock CEO Larry Fink coming out here, says he believes the Fed will have to continue raising rates, but inflation more likely to stay higher for longer, ironically, in the 3 to 4% range for the next few years. So this will be very interesting if the BlackRock CEO is on the right lines here, and maybe they start to change the terminology and make maybe 3 to 4% the target rate. That will be a very big shift. And he also believes we've only seen the initial cracks here, and then more bank seizures could follow the collapse of Silicon Valley Bank. And it does seem like that way. We're just starting to see the initial cracks and then a bit of a rebound as there's some positive news, you know, bailouts here or backstops, whatever you want to call them, being put in place. But these are just the first few banks to have these issues, and this could be a lot more deeply entrenched and widespread. Watcher Guru also posted this: just in the US, $2 trillion could be injected into the banking system by the Federal Reserve Emergency Loan Program, says JP Morgan. So the printer is coming, or we could actually argue the printer is already here and is really starting to be fired up right about now. So drop me a comment down below. Are we going to see mass money printing, the potentiality for lower interest rate hikes, and a U-turn in monetary policy in the West after these cracks in the banking system have shown their hand? I'd love to hear from you guys. Drop me a comment down below, and I will see you again in the next one. Peace.